Hello and welcome back to the channel. So I've been investing for a couple of years now, and today I wanted to share 5 things that I wish someone had told me before I had started investing. Hopefully these steps, these tips are something that actually help you on your own journey when it comes to investing. So the points that I have to share today may be a bit different from what you've heard from other sources who speak about investing and finance, but I find them to be extremely relevant. So getting to it, the first piece of advice that I wish I had gotten is share what you're doing with someone that you trust. This could be a friend, a family member, whoever. Share the details that you find relevant, maybe such as what brokerage that you're using, what amount you're investing, why you're buying into a certain investment that you are looking at. The reason for this first point is actually twofold. The first being that obviously life is very unpredictable, and it's always good for someone you trust to have the information just in case they ever need access to it, in an emergency. The second reason is that if you can explain what you're doing to someone that you could just bounce some ideas off, it would really help to clarify your own sort of investment thesis. If you've been too focused on a certain investment idea, it's always interesting to get a fresh perspective from a new set of eyes. So it helps you avoid myopia. The second piece of advice that I wish I had gotten was something that I find probably the most important. Invest in what makes sense to you. Now, I'm not just talking about equities here. If investing in Bitcoin makes sense to you, then you should do that. If real estate makes more sense to you, then go for real estate. The entire purpose behind investing is to put out money now in order to get, a return and more money in the future. How you achieve that final goal, it's completely subjective and differs for each and every person. Even when it comes to investing in equities, for example, figuring out what sort of style actually resonates with your personality makes a lot of sense. You may be better suited to be a trader, say over a value investor. If you understand commodities because you work with them closely, then it might be a good idea for you to deal with commodities. If you enjoy working with startups, then maybe something like angel investing or funding startups would be a better alternative for you to, get a better return. It's always a good idea to experiment when you're starting out, and maybe a combination of these things based on your level of comfort would be the right mix for you. It's about investing in what you understand best. The third piece of advice that I wish I had received when I first started off investing is that when investing, plagiarism is actually good. Do not be afraid to replicate the investing strategy of someone you want to learn from. It's a good idea to reach out to someone who you admire and want to learn more from. For example, if you reach out to maybe an author that you like a book that you like, for example, 100 Baggers, I know that Chris Meyer does respond to emails. So if there's something that you liked in the book and you want to ask him more about it, you can always send Chris Meyer an email and maybe reach out to him. Same for any other author of an investing book that you actually like. If you find someone's strategy or their books interesting, it's probably a good idea to reach out to them, since they would be more than happy to deal with someone who actually appreciates their content. So the fourth piece of advice is take your time to learn before you start investing. Put in the time to understand businesses, look for a value that makes sense to you, and then place a significant chunk of your portfolio in that with conviction. It's better to be honest with yourself. If you do not have the time to research and learn about a company, then it's a better idea to start investing in passive funds. Monthly contributions to a globally diversified, low-cost, tax-efficient sort of passive portfolio is a great alternative and would likely lead to good returns over the long term. The fifth piece of advice that I wish I'd gotten is it's important to hold cash. I agree that investing is about making your money work as hard for you as you work for it. But it's a good idea to not overinvest to the point where you don't have sufficient cash in the event of an emergency. It's better to prepare an emergency fund before putting your money in the market or into whatever you want to invest into. You shouldn't have to sell your investments in order to fund some short-term, near-term expenses. When investing, no matter what you are investing into, it's always a good idea to have a sort of long-term mindset. Put in an amount that you wouldn't mind not having access to for the next, say, 5, 10, or even 15 years. Even if you put in an amount into your investing that seems very small, it's not really an issue since you've at least gotten started on the process. Compounding a small amount over time will definitely snowball into quite a substantial amount over the long term. So I just wanted to summarize all the 5 points. Share what you're doing with someone you trust. Invest in what makes sense to you. When investing, plagiarism is good. Take your time to learn before starting to invest. And 5, the importance of holding cash. I hope you found some value in the 5 points that I mentioned. If you liked any of the points or didn't like any of them, do let me know in the comments. And yeah, thank you for watching.